Hello there, investaholics and friends. In today's Spotlight review, we're going to be looking for world domination. We're going to review IHWL, which is the iShares Core MSCI World All Cap ETF. Is this the one true ETF that rules them all? Hang around and find out. Well, hello there, investaholics. This is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your own personal finances, expand your investment horizons, and crack your financial sky. Okay, let's jump right into the information. Investment objective. The fund aims to provide investors with the performance of the index composed of developed market equities hedged in the Australian dollar. The index measures the AUD Hedged performance of large, mid-cap and small-cap stocks in the globally developed markets, covering approximately 99% of each market's free float adjusted market capitalization. So no exposure to emerging markets in this one. Why on earth would we bother with this? Exposure to a broad range of developed market companies around the world. Total market coverage providing a broader and more representative exposure. Use to diversify internationally and seek long-term growth opportunities in your portfolio. Seek to minimise the impact of the Australian dollar volatility on your international returns. Okay, so we're looking at a net asset value of $34.81, trading just below that at $34.61. Market cap is roughly $113 million. Management costs per annum is pretty reasonable, 0.09. It's getting towards dirt cheap, to be honest. You get a distribution semi-annually in January and July, start in the middle of the year. Dividend yield is about 2.5%. Who knows really where it's going to stay at these levels or not, just for the fact that there's all those influences, COVID-19, but hopefully it's comprised of a lot of the bigger companies, so they should be reasonably stable. IHWL lets you achieve instant international diversification as the ETF invests in overseas equities and bond markets. IHWL would be used as a key component of a diversified portfolio as an investment in this ETF. It gives you access to all the major international markets. IHWL has performed reasonably well since its inception in the mid-2016, giving investors roughly 10% return. Obviously that's going to change a bit these uncertain times, but we'll see how it plays out. So the MSCI World Investable Market Index is like the MSCI World Index, but adds the small caps, making it one of the most diversified benchmarks. As the name suggests, it aims to capture all investable stocks in developed markets as determined by size and liquidity. So this doesn't really have any exposure to developing markets or emerging markets. So take that into account, but it gives you a pretty good spread of overall investments. So you can see by the graph here on the left hand side, since the end of February, as with most stocks globally, it's been knocked around pretty significantly, lost 20% or whatever that is. So you're looking at pretty good gains up until the end of February. Really, this ETF is heavily focused on America, just a function of how it's set up, developed markets and all that. So Japan comes in a distant second, then followed by the United States, Canada, Switzerland, France, Germany, Australia, about 2% there, and followed on by a sprinkling from other countries now as well. So heavily focused on America. This ETF is actually physically made up by other ETFs, so if you go onto the website and have a look at it, you'll see that the holdings within this ETF are iShares Core S&P 500, which is IVV. Also iShares Core S&P Small Cap, which is IRJ. And then you've got the iShares S&P TSX Capped Composite Index, which is XIC, and that's Canadian. And the iShares Core MSCI EAFE, which is code IEFA, and that covers the rest of the world across the market cap spectrum. So this one is actually made up of ETFs, as strange as that sounds, and that's how you get the actual coverage of the whole, like, global coverage of the developed markets. So looking at the weighting, you know, if you didn't want to bother with anything else and you just wanted to invest directly in America because this is so heavily weighted towards America, you just go and buy IVV. That'd be definitely a good alternative. But if you're just looking for one trade, you don't have to actually make any other trades. There's no hassles. There's no more research or whatever. You know, this could be an option. You know, one trade, you get exposure to all the global developed markets. Definitely something to have a look at if you're not that way inclined. What I mean by that is if you don't really want to do the work, these type of ETFs can actually pretty much tick the box for you. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's KrackTheSky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are, expand your investment horizon, and crack your financial sky. Thanks, guys. See you later.